Mayuresh Joshi of William O'Neill. He's joining us right now on the show. Mayuresh, good to have you with us. Good afternoon. Take us through your assessment on whether or not the structure of the market looks favorable to make big ticket investments right now, and specifically looking at the outperformance of the mid caps and small caps today.
Afternoon, Devina. Largely, again, I think the coronavirus fears are still plaguing equity markets across the globe, and volatility is here to stay. Having said that, the outperformance of the broader markets might still very well continue. What you've probably seen in terms of sectors within the broader market actually expected to perform well, and certain stocks within those are looking good in terms of their earnings outlook. I think the broader market gains probably can be far more compounded than the Nifty movement itself. So I think the stocks where leadership position still continues, where the earnings trajectory is good, I think those stocks that fit our canceling model actually look good from investment horizon over the medium term.
Mayuresh, there is a palpable buzz in a lot of these internet-linked names, but even some of the others have done very well. One of the companies which is really shooting up in today's session too is Indiamart Intermesh, 2600 for that one. What do you do here?
Absolutely right. So I think the numbers were very, very good for Indiamart. And again, I think all these new age business models are really catching up. So whether you talk about Indiamart, whether you talk about Affle Ind, I think all these stocks have given a stupendous run up over the last few weeks and months. For Indiamart in particular, I think the marketplace that they've created, I think is quite unique. And lastly, again, I think the numbers, 500 odd crores is what they've posted in terms of top line for FY19. For the quarter gone by, 165 odd crores, they've got cash and cash equivalents on their balance sheet of almost 850 odd crores. And again, when you probably look at their entire database at this point of time, 5.5 million suppliers, almost 98 million odd customers. When you're probably talking about the spends in terms of the paid subscribers, is almost gone up from 44,000 to 45,200. So I think the inherent need of an online marketplace, the kind of penetration that we're probably getting even from tier 2, tier 3 cities in terms of the online ordering or the online shopping, I think those trends are catching up significantly. So I think all these stocks, which are the new age stocks as I call it, Indiamart, Affle have done really well, but valuations have gone through the roof. So I think one must probably assume their risk reward at this point of time. I think it's way above our pivot in terms of how the stock positioning is. So our own sense is that I think if you're making a reasonable amount of money, I think some amount of money should be taken off the table, at least at this point of time.
Sorry, did I hear you say you take money off the table for IRCTC?
No, it's for Indiamart, right?
Indiamart, okay, not IRCTC. That's what I was wondering, because this one, the business model is looking so robust right now. The growth prospects seem very, very strong. Okay. Sorry, Mayuresh, finish your point.
Sorry. Even here to interrupt, Neeraj, I think the moment on IRCTC, I think they've got a unique business model. I think the catering business is really doing well. The ticketing business is 80-85% EBIT margin. But again, as per our methodology, what we track on the canceling front, I think the move from the pivot over the last 100 days is almost 85%. So it's a stupendous move that the stock has given. So again, similar to what I was talking about Indiamart, right? I think if your risk rewards are well measured, again, a partial amount of profit, that really depends on how your risk reward is placed, should be booked and locked in for most of these counters which have done phenomenally well. Because if the market does correct and the volatility that we've seen, though these stocks are defying gravity, I think it does make prudent business sense from a valuation perspective and even from our methodology perspective to take something off the table at this point of time.
Okay. By the way, viewers, keep in mind some of the gas-related stocks, the gas distribution stocks, the likes of IGL, MGL, etc., are trading at the day's lows. IGL is down about 3%. MGL should also come up on your screen. I wonder if that one too is corrected. Yes, trading close to day's lows. Mayuresh, you always preferred a GSPL or some of these others? That stock is doing well. What does one do now? And if somebody is not invested, is it still a stock worth buying into?
I think we still feel so, Neeraj. I think if you probably look at the gas stocks in general, I think the gas stocks have done phenomenally well. Obviously, I think the government push for clean energy, what you've seen in terms of Mr. Pradhan's statement of taking clean energy from 6% to 15% infrastructure investments are obviously a testimony in the direction that the government probably wants to go. Having said that, the pipe expansion that is happening in the budget, what got announced from 16,000 odd kilometers to 27,000 kilometers, is also direction in the same side. So again, I think GSPL, I think one of the key beneficiaries, because if you're expected to increase the pipe infrastructure, I think the transmission volumes obviously are going to go up. GSPL is going to be a beneficiary over a period of time, though they are capital intensive projects, but the transmission volume should hold up. We've always maintained that the two SPVs that they've signed is a step in the right direction, and those two SPVs can also contribute a small amount to the overall SOTP valuation. And let's not forget, I think the 55% stake that they have in Gujarat Gas, where our channel checks have suggested that the Morbi gas supply has actually gone up tremendously. So EBITDA per SCM is expected to remain extremely stable, with volumes expected to grow up. I think there is an inherent valuation that also comes through, even if you assume a 20-25% holding company discount on the investments that they've done. Yeah, so I think there is some sense in terms of what our methodology throws up on CanSlim, that this stock probably looks good from most parameters, including the earnings perspective and the return ratio, specifically the ROE that it delivers.
Okay, now before we come to closing strategies, because Ashish Kyal picked up Atul, I want to go to Mayuresh, because Mayuresh tracks Atul and it was his top call. Mayuresh, you just want to come in on this one. It's actually had a fabulous up move. Do you reckon that these moves could continue for some of these names like Atul Limited?
So yeah, I think from the moment we've initiated the call, I think it's almost up 25%. So again, our methodology actually suggests that if it moves a little bit further, I think we might take some money off the table for this one. But again, I think the move for specialty chemicals, Neeraj, and we've discussed this time and again, has been a fabulous one. Even before the coronavirus outbreak, the supply constraints were very, very evident in terms of environmental issues and effluent discharge, which a lot of the unorganized Chinese companies could not do. A lot of these companies have the inherent benefit in terms of a mix between export orders and domestic orders as well. And a lot of these companies are embarking upon the opportunities that they are sensing by upping their capex needs. Because generally, I think when you're talking about niche chemicals, I think the EBIT margin profile is inching higher. So yeah, the earnings profile has remained extremely strong. It is expected to remain that way. So that specialty chemicals as a space looks very, very attractive. As per our methodology at CanSlim, I think we still believe that Sudarshan Chemicals, if one really has to choose, still looks pretty attractive at this point of time based on all the parameters from earnings, leadership position, institution holding, and return ratios. So I think that is one stock that probably has not moved significantly compared to the others, and where I think all the parameters probably remain very, very robust as well. So yeah, so this is something that I'll probably look at from the chemicals.
Okay. Mayuresh, a stock which could be in news over the weekend is Max. Now, you would have heard some details. We do not know the exact details, what kind of deal. We do not know that stuff. But would you preempt anything and try and buy into a Max Financial?
Again, I think it was largely getting factored in, Neeraj, over the last few days. And let the modalities of the exact deal workings come out. But yeah, I think it's a significant accretion for the life insurer. The numbers were pretty good for the quarter gone by. So the embedded value has crossed 10,000 odd crores. VNB margins were at 21 odd %. And they've got a very, very healthy mix in terms of the protection business and the non-participating policies that they're probably selling. So yeah, I think the business probably looks robust with the new tax regime. A lot of these players are coming under pressure because of the expectations that the guys in the lower tax bracket might actually look at not saving, but probably look at spending the excess money that they're saving from the leeway that they're getting from the new rates. So let's wait and watch is how I would put it. I think let the modalities come out.
Okay, Mayuresh, we'll leave it at that. Thanks much for taking the time out and being with us today. Appreciate your time.